Episode 56 of Canadian Mortgage Weekly, our first one of 2022. My name is Sam Thompson, and as always, we're joined with Joe. How are you doing this morning, Joe?
Hey, Sam, I'm doing really well. And it's great to be here on this new year, 2022. And really glad that we can put 2021 in the rearview mirror and looking forward now into a really awesome year. So it's good to be here and really excited to be part of episode 56 with Canadian Mortgage Weekly and really pumped about the content we have planned for today. How are you doing, Sam?
Yeah, I'm doing good. I love New Year's because whether or not I stick to any, resolutions or plan, it at least feels fresh in the moment. January is always a good time to look into the new year, start some planning. And yeah, like you're saying, we have a lot of really good information and some stats to cover for everybody today.
You bet, yeah. But before we get into all that, I mean, how was your New Year's? How was everything for you? It's kind of great to be back on doing this again. I know we took a week off, so yeah.
Yeah, it was very good. Getting to see family, keeping busy, enjoying some time off. But again, it's hard to find stuff to do with especially the new restrictions.
Yeah.
But you know what, we had a good Christmas and New Year's with the new puppy, so it kept us busy. And it's better than TV. You get to have him running around, so keeps us on our toes for sure.
And that's really amazing. Yeah, to have a new puppy to kind of keep you running around and all that. It gets you outside too, I bet, for the walks and all that.
That's right. Even on the days when we don't really feel like it or the weather's not that forgiving, we're still out there.
That's great. Yeah. Well, glad to hear that. And yeah, for ours, like our New Year's was good too. And we really didn't do much ourselves. Stayed in, ordered in some food. It was actually a really good time to do that. Yeah, looking forward to this new year. And with 2022 is going to bring some really awesome news. I'm sure that we can share now with everyone that is tuning in today. With mortgages and real estate and what's happening there.
Yeah, absolutely. We have some awesome points, and I guess we could jump into our normal stats that we cover. Every week we like to see where the bond yield is at, look at some rates to give an idea or a forecast of where things are headed. And that's another good thing about it being January and the new year is, again, like you're saying, we get to leave 2021 behind and look into what we could be seeing in the upcoming year. So I'll go ahead and we'll look into these numbers.
Yeah, and with the bond yield, I know that I was off for a little while there, just trying to get into the family routine, and we saw like the bond yield at that time before Christmas, it had been all of a sudden taking a dive. So let's take a look and see what's happening now.
So yeah, as you can see in the graph here, it looked like, I believe last week we would have been just around where it's starting to dip, but we've started to see it's climbing back up again.
Yeah, and a recent surge almost as we've gone back into the new year after the dip in over the Christmas break. Makes me wonder, what was that dip a anomaly and now we're headed back to where we are expected to be, or is the momentary surge the anomaly? So we'll have to see and monitor this.
Yeah, it'll definitely be interesting to see, with some uncertainty with Omicron, the new lockdown, all of those things, whether that has impacted the surge, like you're saying, one way or another. But yeah, definitely being at the top of that little spike, it'll be interesting to see if we keep that strength and we continue upwards, or like you're saying, if we drop back down.
We'll keep an eye on this here on Canadian Mortgage Weekly. But as everyone, we just want to make sure everyone knows that the 5-year bond yield is a great predictor of the 5-year fixed mortgage rate.
Mhm.
And as you see, between September and late last year, it had started to climb. And we saw those 5-year fixed rates move in tandem with that.
Mhm.
So we did see some decrease in the 5-year rates with the decrease in the yield, but yeah, maybe these low rates aren't here to stay. Maybe we will see, as planned, those rate increases come into fruition later this year. But it will all really depend on the market, Omicron, and what's happening. So
Absolutely, yeah. There's lots of variables, and it's good to keep a track to see, where that fixed rate's going.
yeah,
Mhm. Yeah, and in terms of the variable rate, we also like to monitor the CDOR rate, and see where that is, in, specifically what its variance is from the prime rate of 2.45. And we're seeing that as of yesterday, it has increased and it's 0.450%. So the variance is actually now at 2%. And I know, how we have been gauging, um, what the variance is as long as it's over 2%, it still is a good option to stick with that variable rate. And we saw it start to narrow that margin, at the end of last year. So seeing that it is at 2%, could be an indication for what's coming in the future.
it really can. Yes, the fact that it's at 2% now really tells us, like you're saying, Sam, it's a good opportunity still to get into a variable rate mortgage. The pricing is still really good comparative to a fixed rate. I keep saying it over and over again. It was a crazy stat that we mentioned here on Canadian Mortgage Weekly last year, that a third of Canadians are taking variable rate mortgages. I was on the phone this morning even with a client who really wanted a variable rate mortgage. And those are really key if you're looking for flexibility and low penalty. And it's a really good time to get one. So yeah, if you are interested in a variable rate mortgage, give us a call. We can talk you through that while the CDOR rate is showing us that it's a good time to get one. But we'll monitor this one as well in Canadian Mortgage Weekly. As fixed rates change and as variable rates change, we can keep an eye on what's the better deal. But right now, yeah, we're seeing fixed rates, 5-year fixed rates in the high twos. And if you're looking to refinance at a variable, you're looking at under 1.5%. So that is
Mhm.
really, really low.
Yeah, and I mean it's always a good option, even if we see, the rates start to climb, it'll be incremental. So it won't go from, under 1.5% to 3% the next month. It'll be a gradual process. And we also like to track it based on the Bank of Canada's interest rate announcements. They do this 8 times every year. And we do want to note that we will be having a special episode of Canadian Mortgage Weekly on the 26th of January, where we'll see, the Bank of Canada's first interest rate announcement. So this will be exciting. Whether they hold it or not is good enough, but it's nice to see their commentary of, now that we've seen and heard of Omicron for, over a month. It'll be interesting to see if their commentary or policy has changed at all.
It really will, Sam. So we'll keep an eye on that. Tune in to January 26th. I know those specific episodes happen on Wednesdays. So really pumped to continue our Bank of Canada coverage this year in 2022 on Canadian Mortgage Weekly. But yeah, with the way it's all going to depend on where this bond yield goes over the next few weeks heading into that. But I know that a lot of forecasts aren't even calling for a rate increase until the spring of 2022. We're still in the middle of winter. I don't think we're seeing the snow melt anytime soon, Sam.
Not at all, not at all. We just got some fresh snow in Barrie this morning, so I think we'll likely be hanging at the same benchmark rate for at least a few more announcements. But yeah, we'll keep an eye on that, and definitely, provide some insight into, the commentary that the Bank of Canada provides.
So moving on from this one, I know that it's a stat that I was really looking forward to seeing for December. Hasn't really been released yet, as you mentioned there, Sam, when you looked into it for us, as well. And yeah, so national house price. What is the national house price for December? Can anyone find this information out for us? We cannot find it anywhere. But yeah, Sam, as you know, and as you have up there, national house price for November was $720,850, and it just keeps increasing. So where we are at now, it's either gonna go past where we were before, or lag just slightly. But I guess that's what 22 is all about. And let's dive into some of our content now, because some of our content will probably be able to answer this question. Where is, this price trend going in 2022?
Absolutely. Yeah, it really dovetails into what we're planning on talking about. And that's just exactly like you're saying, some trends to look out for with the new year. It'll be interesting. I know that we had a lot of changes in 2020. They continued into 2021. So, I mean, it's hard to keep track of where the market's going, but I think there's some key points that will give us at least, a bit of a roadmap of what we can expect at least for 2022.
Yeah, definitely. And it is like a roadmap, like you're saying, Sam, rather than predictions or crystal ball. It's hard to really be accurate 100% of the time. So what we've tried to do here on Canadian Mortgage Weekly is really just find out as much information as we have been able to do and summarize it for you here today. Because everywhere I go, everyone keeps asking me, Joe, where is the market going over the Christmas break? Where are interest rates going? Every single conversation. I could not get away from my work this Christmas. It's not really a bad thing, but at the same time, it's on everyone's mind. And where are house prices going? Where are my interest rates going? And even the mechanic, I was telling you, Sam, yesterday, I was at my mechanic's picking up my vehicle, and even my mechanic was asking me all about the market, all about the real estate market, all about the mortgage market. And I was thinking, you know what? Let's talk about it on Canadian Mortgage Weekly, because it's on everyone's mind. So with that, five mortgage and real estate trends to look out for in 2022. So do you want to just dive into the first one here, Sam? And that is that the fact is that supply continues to be low.
Yeah, I think that's something that regardless of, what news source we're seeing, where we're seeing the article coming from, almost everywhere, it's supply that's really going to be low, and it's going to be further pressing and keeping that upward pressure on house prices. I know that many people were hoping and that it can't sustain where it's at, and we might see a bit of a pressure relief. But the fact is with that low inventory, it's and low supply. I was reading an article that only 4 times in history has Canada been below 2 months of supply, and that was in the winter spring months last year, and then again in October November of last year. So it'll be interesting to see where that supply leads, because that's quite a deficit to overcome. So going into the new year, it looks like the prices are going to keep that upward pressure as the supply is low.
Yeah, I definitely agree. And there's a number of factors why the supply is low, right? I mean, we're looking at COVID factors. People just don't want to have others looking into their home. They don't want to go out looking for a home during this time. So it's making them not sell their house. So it's definitely keeping a lot of supply low on that side. Material supply shortages for builds. Yeah, so there's a lot of stuff there, but you're right, Sam. Supply continues to be low. Low startups on new houses. That keeps, this new housing starts keep decreasing every year, it seems. So there's not additional supply that's being put into the market to compensate. It's just a complete lack. So how can the prices really go down? I would ask yourself, if there's not enough homes that people want. That's going to be a really interesting year, because I don't know where we're going to get these additional homes that Canadians are looking for.
Yeah, I mean, it'll be interesting to see, what the Liberal government can do, because I know that they had introduced some policies that we covered in the fall that, were hopefully, I know there was a few that were supposed to help municipalities advance their, house building targets and to increase new starts. But again, whenever we see traction on that, is unsure. It could be further down the road. We definitely need it now, but we'll see what's in store.
We'll see what's in store. We'll keep you posted here on Canadian Mortgage Weekly with those mortgage and real estate stats. Moving on though, I know that there's another real big trend that is surfacing, and that is that we're hearing that the condo market could have an increased demand on it this year. And with that, it's kind of a 180 to what we're talking about right now. But I know that with condominiums, they usually price slightly lower than a home, like a single family home. So that could make sense. I know that a lot of our first-time home buyers, the ones that have gone through our program, new to Canada buyers, they're more on the starter end, and we do see a lot of those going into condos.
Yeah, absolutely. We actually saw this in an article quoted from CIBC, who was expecting, again, some of the shift as if we start to see rates beginning to rise, as we're tracking that 5-year bond yield and, where the variable rates headed. But if we see, rates beginning to rise, price points beginning to rise, we might see some more activity in the softer market, which in our case here is the condo. And like you're saying, a lot of first-time buyers, whether or not that was their ideal scenario when they start talking with us, a lot of them do drift towards the condo market just because the price points are a bit more achievable for first-time buyers.
They definitely are, Sam. We really see that on our end, especially when we're underwriting files and seeing, where they fit. A lot of the times where we get pre-approvals are for first-time home buyers are not enough for that single family or semi-detached home. It's actually just enough for a condo in that market. So this I guess prediction or trend alert does make sense that this could happen in 2022, that condos could see an outpacing of other types of real estate in 2022. But we'll keep an eye on that here, as always, on Canadian Mortgage Weekly. Moving on to the third trend to see, and this coincides with that supply issue, Sam, and that's there's going to be an increase in demand at the same time there will be a decrease or a lack of supply. And that is Canada's really aggressive immigration targets.
Yeah, we were looking at these rates for even the last few years, and the targets have been definitely very high, and they're still keeping aggressive. Even amidst COVID, you would think immigration targets might decline, there might be a bit of a shift, but it seems like they've kept pace, and their target even for 2023 is higher than their target for 2022. So that's definitely adding some fuel to the demand, where we're seeing it's low supplies, and the only thing that can make it even shorter supply is more buyers that are looking for properties.
Exactly. And not only that, Sam, but for these immigration targets, I know that Canada specifically has an express entry program for anyone that has over $100,000 in assets that is ready to come to Canada. I think it's 100,000, and it could be 150,000. So if I'm incorrect on this stat, I apologize. However, this does make a big impact because we see these folks on our end applying for mortgages through the New to Canada program, and these folks have down payments ready to go. And they have just landed in Canada, they have their whole family, and they want to get settled, start a business, do something. So with the New to Canada program, the mortgage companies and the government has made it a lot easier for someone new to Canada to buy a home than it is for someone that is already from Canada within the first 5 years. So they're really incentivized to buy a home within those first 5 years. All these 411,000 people that are coming, in 2022 with this lack of supply. So I could see this putting a upward pressure on pricing as well, not a
Mhm.
downward pressure on pricing, because I know that immigrants usually tend to be very oriented in getting settled and buying a home as soon as possible.
Yes, definitely a good portion of our first time buyers. Um, actually a lot of them that actually, are ready to go. Like you're saying, a lot of the mortgage insurers have some great programs for
Yeah.
anybody new to Canada, permanent residents within 5 years. Again, if they have that down payment saved, which a lot of them do, they have a really good head start over, sort of the average Canadian. So it's definitely a hard target number that we see of new to Canada immigrants purchasing homes.
This is really going to be a stat that I think will like, as long as immigration keeps happening, this will continue to put upward pressure no matter what happens on anything else. So
Mhm.
um, this will be something that we want to monitor, and we will continue to monitor is the immigration, and if it's slowing down or speeding up, or what the targets are for going forward. But yeah, trend number four. Let's look at this one: secondary home ownership. And with that, I know that we've seen a lot of parents join on as co-signers, becoming secondary home owners. I know we've seen a lot of people buy cottages last year, Sam.
Yep.
We've seen people refinance and buy rental properties last year.
Mhm.
So there's this huge explosive growth now in secondary home ownership in Canada. And also through the co-ownership of homes, like in fractional ownership, where, parents own part of the home now that the kids buy. So it's really interesting to see this happening, this trend in Canada. And I think this is this trend is emerging now as prices start to creep up, and first-time home buyers can no longer on their own buy a home, but they need help from parents. And Sam, you and I did an episode there on giving the gift of a down payment there.
Right.
That's very closely related as well.
Yeah, absolutely. I mean, it's become much, much more common. And, we've even processed deals where, maybe the mother is looking to downsize anyways, but, even those price points are very high. So the family ends up going in on a duplex where the basement unit or the secondary unit becomes the mother's, or the parents, and then the rest of the family lives in the other unit or the upper unit. So it's definitely emerging as more common. It may be, like you're saying, co-signers and fractional ownership was heavy early in the year, but I think starting to see, cohabitation in the house being bought, we might see that, become much more common.
All these different ways of owning a house are really starting to show up in these last few
Mhm.
years. So as these trends continue, we'll keep an eye on them. But the co-ownership, cohabitation, fractional ownership, these are all different ways that as a first-time home buyer, you can get into the market sooner rather than waiting and doing it on your own. And what we've seen is folks that have been able to do that sooner have benefited exponentially versus those who have waited and then gone ahead and done it on their own. Something
Mhm.
that we're seeing that I've noticed a lot of other professionals like real estate agents as well posting is that if you were to buy a home a few years ago, obviously you would have had the explosive price growth.
Right.
And if you were to wait, like if you were to do that with your parents or an uncle or a co-signer, you would have ended up much further ahead than if you were to wait until now and then buy it on your own. The
Mhm.
amount of equity realized would be much higher in the first way. So I know we've done episodes like that explaining the exact financial outcome of this. However, it's something to really consider.
Mhm.
Yeah. So fractional ownership, give us a call on that. We can help
Yeah.
you with that. And number five, something we've been seeing a lot of over the last year and into this year is the relocation and
Mhm.
interprovincial moving there, Sam.
Yeah, we've seen, I mean, definitely at the start of the pandemic, the normalization of work from home, we saw a lot of relocation from, a city center to something more rural, with some more green space. But we even saw a trend start, where there was a lot of interprovincial. I know that specifically looking at people relocating from Ontario to New Brunswick was a big jump just because New Brunswick has such a soft housing market compared to Ontario. We saw, quite a huge jump in that, and that's expected to continue. Again, as we're seeing forecasting of supply low and house pricing being high here in Ontario.
Really good facts there, Sam, and that's correct there with the New Brunswick pricing being very
Mhm.
soft. And something that's happened in New Brunswick is everyone that has had a home in New Brunswick pre-pandemic has seen their prices double and in some
Mhm.
cases triple. So
Yeah.
it's really, really nuts what's happening out there. And it's really normalizing the prices across the country to be all the same.
Mhm.
We saw Toronto be here before, as I was telling you, Sam, and as I was showing you, New Brunswick was down here.
Yeah.
And now New Brunswick is here. So it's going to be interesting. Well, those single family detached homes in Toronto post pandemic go this way in pricing and go back down, or will they go back, or will they? Sorry, that's not the question. Will the Toronto prices increase, or will the New Brunswick prices decrease post
Mhm.
pandemic? And it's hard to say that New Brunswick prices will decrease post pandemic, because I think the work from home and this whole interprovincial moving, this is not a fad anymore. This is becoming
Mhm.
more of a permanent solution with people working from home. I think this is going to be a more of a long term and maybe a shift in the way people are working
Mhm.
going forward. So
Yeah.
I couldn't really see this changing. But at the same time, who are we to forecast the 2022 prices and sales? We're just mortgage professionals. We're talking about, where we see things going. Let's really check into some of these stats. And I know, Sam, you
Mhm.
had looked into what the Canadian Real Estate Association is saying, Remax, RBC, like some of the main leading figures, what they're saying prices are going to do in 2022. So let's go over some of what these leading economists are saying it's going to happen for 2022.
Yeah, absolutely. I mean, excuse me. In the article and the data that I was seeing, they were providing some commentary as well as some forecasting for 2022 of home sales in Canada, as well as a forecast of the home prices in Ontario. So, I mean, looking at what the CREA is predicting is that sales are expected to drop another 8.6%. I know a lot of realtors that may be watching this just have a big gasp because they thought it couldn't go any lower. But we're seeing sales dropping again and the prices actually increasing by 7.6%. So it's an interesting kind of parallel there of the reflection that, when one of those is affected, it's actually going to keep that pressure, and they're forecasting that over the year. We'll see that increase in pricing as well as a further reduction in sales.
So a reduction in the number of houses and condos sold
Yes.
overall, but an increase in the price of those
Mhm.
condos and homes sold. Wow.
Mhm.
So kind of matching up with the lower inventory
Mhm.
causing the higher pricing. Okay. Wow. So that is the Canadian Real Estate Association looking at the entire of Canada's real estate market. Let's look at Remax now. I know Remax has always come out with its price growth model. So for 2022, I see they're predicting a 9.2% increase in prices for 2022.
Mhm.
That is quite substantial. If we take the November $720,000 uh, average house price and increase that by 9.8%, that makes a average house price of 790,000 and change, which is approaching 800,000.
Mhm.
Wow.
Yeah, so definitely a big jump. And I mean, in a lot of the articles and these predictions here, it's contradicting a lot of the people that, again, are still in the belief that house prices are going to soften, they're not going to go anywhere. Maybe we might see a reduction. A bubble pop is usually the term associated, but it looks like a lot of, again, these leading experts in real estate and lenders are predicting the opposite. So it's just an interesting point to note.
Yeah. Yeah, looking at Remax, moving on to the lenders, TD, RBC, and CIBC. You've put in some stats here. RBC sales as well predicted to drop quite a bit more actually than Korea. 19.8% decrease in overall volume of homes and condos sold. So 1/5, that is quite a considerable shift in the amount of homes sold in 2022 versus 2021. 1/5 less inventory.
Yeah.
So, but price-wise, RBC is still predicting an increase. Price-wise, they're predicting a 3.3% increase, which would then be a, what's 3.3% here on 720? 23,000 approximate increase. Still a decent amount of chunk of change. And then TD, 7% increase in pricing. Now I know CIBC didn't really come out with a price model, but they've also indicated though that sales volume is set to decrease as well by 15%. It's not quite 1/5, but still quite a bit of decrease in sales. So we'll keep an eye on that here on Canadian Mortgage Weekly. I know there's a lot of stats and a lot of trends we reported on today. So what I'd like you to do is, if you are interested in learning more about these stats or finding out if you want to refinance or get started on a pre-approvals, contact either myself or Sam. And Sam Thompson is not a real estate agent. Seems like you're a real estate agent these days with the amount of real estate advice we're pumping out here on the real estate figures. But no, Sam Thompson is I guess an expert in real estate at this point, but a mortgage professional, mortgage agent in Barrie, Ontario. Has been with us for almost 2 years now, and is originally from Ottawa, Ontario, and has lived in Barrie for about 1 year and 3/4. Sam's got a dog and is married with his wife Grace. Sam, thanks for being here on Canadian Mortgage Weekly, episode 56, and for always providing your advice and expertise.
Yeah, of course. Well, thank you so much for having me again. Yeah, we did cover a lot of information, but it's always good to have you on, Joe, because for anybody who doesn't know, Joe is a mortgage broker for over 11 years now. So definitely a lot of industry experience. There's, few files that we look at or trends that we see that really shake Joe. So definitely, it's great to have your opinion and knowledge on the market and the industry. And yeah, thanks for having me on today's episode. It was good to start the new year off with episode 56.
Yeah, looking forward to many more episodes this year, Sam. I know we have a great one planned for next week. Join us next week on Canadian Mortgage Weekly as Sam and I dive into refinancing, specifically 3 ways that refinancing can cure the Christmas blues. So join us next week for that on Canadian Mortgage Weekly, Canada's video mortgage news weekly podcast, here for episode 56. And yeah, as always, thanks for joining us today. Comment, share, like this podcast if you have found it useful. We would love to hear also what topics you would like to see on Canadian Mortgage Weekly or our other video series for our reaction videos or topic videos. And we'll see you next week on Thursday at 11:30.